Hey everyone, welcome back to Corporate Decoder. Today, S.L.M Corporation just filed its report for July 2026, and I am seeing some key financial signals that are important for investors. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company has just released its earnings, and we're going to dive into what those numbers really mean for the business. We are looking at S.L.M Corporation's latest update filed on the 23rd of July 2026. This report covers their financial results for the quarter that ended on the 30th of June 2026. The main event here is the release of their earnings, which are usually a big deal for how the stock performs. S.L.M Corporation, also known as Sallie Mae, is a pretty big name in the financial services world, especially when it comes to student loans. They are incorporated in Delaware, and their stock is traded on the Nasdaq Global Select Market under the ticker symbol SLM for their common stock and SLMBP for their preferred stock. Let's get straight to the financial picture. While this particular filing doesn't contain the detailed financial tables right here in the main body, it refers to a press release that does. This press release, furnished as Exhibit 99.1, contains the actual earnings results based on external information SLM Corporation. Sallie Mae recently released its second quarter earnings for 2026. The news indicates they reported their financial results for the period ending the 30th of June 2026. Looking at the wider context of S.L.M Corporation, it is a company focused on credit services and its preferred stock SLMBP has been in the news regarding how its performance might affect investment strategies. The current price for SLMBP is around $74.25, with a 52-week range of $70.58 to $83.05. This suggests the stock has been trading within a fairly narrow band recently. The company has about 1788 employees. Institutional investors are showing some interest. Atlas Wealth LLC holds a significant chunk, about 4.2% of the company, and Shikia Asset Management, Inc. also has a notable presence with 2.8%. This kind of institutional backing can sometimes provide stability or indicate confidence from larger players. The filing mentions that the information being furnished is not being filed for legal purposes under Section 18 of the Securities Exchange Act of 1934. That is a technical detail, meaning they're not taking on the same level of liability for this specific furnished information as they would if it were officially filed as part of a regular report like a 10Q essentially. They're providing the information, but with a slight disclaimer about its legal standing in that context. The key exhibit here is Exhibit 99.1, which is the press release dated the 23rd of July 2026. This is where you'll find the nitty-gritty financial details. While I can't read the figures directly from this filing's text, an analysis of typical earnings reports for a company like S.L.M Corporation at this time would focus on several critical areas. First, revenue growth. We'd want to see if their top line is increasing. For a company in the financial services sector, this means looking at things like loan origination volume, net interest margin, and fee income. A strong revenue performance signals that they are growing their business and attracting more customers or higher value transactions. Second, profitability. This involves looking at net income and earnings per S-hair. Are they making money, and is that profit growing? For S.L.M Corporation, this would also involve examining their provision for credit losses. This is a crucial number because it represents how much they are setting aside to cover potential defaults on loans. A higher provision could mean they are anticipating more customers struggling to repay, which would eat into profits. Conversely, a declining provision might indicate confidence in their loan portfolio's quality. Third, the balance sheet. We'd want to see their assets, liabilities, and equity. Key metrics here would include the total amount of loans on their books, their capital ratios, and their debt levels. Maintaining strong capital ratios is essential for financial institutions to absorb unexpected losses and comply with regulatory requirements. Fourth, operational efficiency. This is often measured by examining their efficiency ratio, which shows how much it costs them to generate a dollar of revenue. A lower efficiency ratio generally indicates better operational management. Given that this is for the quarter ended the 30th of June 2026, we would compare these numbers to the previous quarter, the 31st of March 2026, and the same quarter last year, the 30th of June 2025, to identify trends. For instance, if revenue is up but net income is down, it might signal rising costs or less effective management of bad debt. Similarly, if their provision for credit losses has significantly increased, it could be a warning sign about the health of their borrowers. Looking at the stock's P/B ratio of 34.5, it suggests investors are willing to pay a premium for S.L.M Corporation's earnings. This can be a sign of growth expectations, but it also means the stock could be more sensitive to any disappointing news. The current price is quite close to its 52-week high, indicating a generally positive sentiment or stable performance leading up to this earnings release. The fact that this filing is in 8K using item 2.02 for results of operations and financial condition means it is about timely disclosure of material events. In this case, the material event is the release of their quarterly financial results. The company is providing this information to the public, so everyone has access to the same key financial updates around the same time. The mention of US-GAAP Common Class Member and US-GAAP Non-Cumulative VET Preferred Stock Member points to how their financial data is categorized according to US generally accepted accounting principles, differentiating between common and preferred stock classes. This is standard practice for publicly traded companies. What I'm actually looking for in these upcoming earnings details is a clear picture of their loan portfolio health and their ability to manage interest rate changes, especially given their preferred stock is floating rate. That is my take. Stay decoded. If you found this analysis helpful, please like and subscribe, and join our Discord community for more discussions.